What's good, y'all? Welcome back to another video with your boy, Irie Futures. In today's video, I will be continuing with the Irie Foundations. The Irie Foundations is traders can come here when they want to learn how to trade. Now, I realize all of my videos are for traders that already know something about trading and the basics and things like that. But I've had many people come and ask me that they're starting from zero and they want to learn from me. I will be making videos on the basics of trading, and that is what the Irie Foundations playlist is for. So if you're new here, go to the Irie Foundations playlist before you watch any of my other videos. Today's video will be on understanding candlesticks. The first video was understanding market structure. Today, I will be diving into candlesticks specifically and the different types of candlesticks and how they react at certain zones and things like that. Let's get straight into the video. All right, y'all, getting straight into the video. Like I said earlier, we will be talking about candlesticks. Now, what you're looking at right now is a bullish candle right here to your left and a bearish candle, which is the one on the right. All right, so getting into what a candle represents. Okay, a candle represents just a battle between buyers and sellers, right? It shows what's happening during a specific time, and price didn't just move, but it pushed, right? Because it's a battle between buyers and sellers. It shows you who won the battle and who's in control. Okay, so the anatomy of a candlestick. Okay, so as you see on the candlesticks, I have labeled some things. So if you look right here to the left candle, it shows close. Actually, we'll start with the right because I labeled everything on this one. So it shows the body of a candlestick, which is all this red and all this green. I've marked the close and open. The open is where the candle started to form, and the close is where it ended its form. Because as you know, there are time frames. So this candle right here opened, boom. If I'm on a 5-minute time frame, this candle opened right here. The 5 minutes has begun. And in this battle for 5 minutes, there's a battle for 5 minutes between buyers and sellers, right? And in this battle, the sellers won. Why? Because for one, it opened high and it closed below where it opened at. Okay. Now these white lines right here, these are called wicks. You will see I marked them highs and lows. The wicks show the rejection, right? So the wick is how high price came and how low price got. Okay. So if the candle opened right here, boom, that means the buyers took it up here. Okay. But then the sellers were like, no, we have power, and brought it down here. Boom, they fought back. Then the buyers brought it up here. They fought a little more, and then boom, 5 minutes are up, new candle forms. So that's why this candle looks like this, and it ended red because overall the sellers won. Okay, so for this green one, unlike the bearish one, the bullish one closes at the top instead of this one open at the top. Reason being is because with the green one, it opened down here. The reason why it's green is because it closed above where it opened at. So because it opened here, right, boom, 5 minutes has begun. We're fighting, we're battling. Sellers bring it down here. The buyers are like, nope, nope, nope. Buyers push it up here. The sellers are like, we fighting back. Sellers brought it down here. Boom, close. 5 minutes are up. Okay, so we ended bullish. We ended off on a green. That's why this candle is green, which means up. The buyers are in control in this candle. The sellers are in control in this candle, right? So green, again, buyers won, red, sellers won. But these colors are adjustable. So you can decide how you want yours to look. If you look over here, you see my bearish candles are gray and the bullish ones are blue. I could actually change that so you guys can understand my chart. So my chart will look like this, just so you guys get a better visualization. So this is how my chart will look, just so you can understand. Okay. So the thing with the candles, the body of the candles, and even the wicks is they can vary. And I will get into what I mean when we look at the charts. The candlesticks itself can vary on the body size and even the wick size. Sometimes you can have wicks that come down here. You can have bodies that look like this, you know. Some candles can look like this, all right? Some candles can look like this. One sec. Some candles could look like this. They can vary a lot. Some candles can even look like this, which is very undecisive, because if your candle looks like this, it's indecisive because you have long wicks and a small body. Nobody really won. It's real indecisive. Candles like this are signs of bullish pressure, because that means the candle opened, sellers brought it all the way down here, but then the buyers pushed it all the way back up, right? And you have this long wick that formed, okay? So this is an indicator of a lot of buying pressure, which 9 times out of 10, the trade is going bullish, okay? So again, the candlesticks can vary, but I'm just showing you the anatomy of the candlestick itself, okay? Now, one thing I do want to go over, well, before I move on, again, let me just re-explain the anatomy of a candlestick. So you have, let me put it back. You have where it opened at, right? Which was here, boom. You have the battle happening within this 5-minute span. Mind you, could be 15 minutes, could be an hour. It just depends on what time frame you're on. And you have this battle going on, and so open here, this battle going on for 5 minutes. The buyers brought it up here, sellers pushed it back down, the buyers fought back here, candle closed, boom. The reason this candle's bearish is because we ended lower than where we opened at. We closed lower than where we opened. That's why this candle's bearish. This candle is bullish because we closed higher than where we opened at, showing that there's more buyers present, more bullish pressure. Okay? So now I will get into the chart and I'll show you guys what I mean about the different types of candlesticks and even how they react to certain zones, which can tell you a lot of stuff. Okay? So with that being said, I want to focus on this one right here in this gray box. We're going to focus on everything in this gray box. So see, you even have candles like this. Look at this. So we're on the 15-minute, which means each candle was a 15-minute battle between buyers and sellers. Okay. So over here, this candle ended, boom, open here. They fought. Buyers won. Open here, another candle, fought. Buyers won. Boom, another one. Sellers won, buyers won. And this is what forms market structure. All right, everything's a battle, because even the market itself is a battle between buyers and sellers. The candlesticks is a battle between buyers and sellers. All right. So diving into the certain zones of these candlesticks. So things that I look for personally when looking at these candlesticks are also tying in market structure with candlesticks. So I recommend watching the market structure video. Is I'm looking for the bias of what's going on. Okay. As you can see, Again, with the market structure video, I taught you guys about higher highs and lower lows. As you can see, this chart is creating higher highs, which means we're in a bullish trend, right? All these higher highs, we're in a bullish trend. So identifying that we're in a bullish trend, I'm only looking for buys. But because we're talking about candlesticks, I'm only looking for bullish candles, okay? Like good pushes from bullish candles, all right? So focusing in this gray box, you see there's still highs being broken, still. So obviously we're bullish. You guys got that down, okay? So when I bring up these zones and how the candles react to certain zones, I'm talking about supply and demand zones because that is what I trade. So what is a supply and demand zone? A supply and demand zone is a zone where the banks came and they caused a lot of volume, and they came back to that zone to test, are the buyers or sellers really here? Are they really making an impact? And that's when the buyers and sellers show them, yes, we're here. And then they take price back in the direction it needs to go. If that is confusing, I'm going to show you what I mean. So because we're in a bullish trend, I'm looking for a candle. I'm looking for a sell candle before volume came in and pushed the markets up. I'm gonna reiterate, because we're going up, because we're bullish, I'm looking for the last sell bearish candle before market got a whole bunch of volume, because 9 times out of 10, that is where the banks will come back to test the level, and that is where we enter. Okay, so again, because this is a video about candlesticks, my strategy is in other videos. We're focusing on candlesticks and how they're reacting to certain levels. So if we're looking over here, we got bullish, bearish, volume of bullish, bearish, volume of bullish. Okay, so we have a few zones here, but we're going to focus on the first one that broke these higher highs and caused price to go up, which would be, so y'all tell me which one would it be, 1, 2, or 3? Which was the last candle before the bullish pressure? 1, 2, 3. If you guess candle number 3, you are correct. So with that being said, I would mark this candle from its high, the top of the wick, to the low. Okay, I gotta fix this, the opacity. To the low of the wick, okay? Boom, y'all see? I just boxed this candle off, and I wanna drag it out so I could see where price came back to it at, okay? So, y'all see I marked the top of this wick to the bottom of the wick. This candle right here, this one right here. That was the last candle that formed before having this volume that broke these higher highs. Okay, and what did price do when it tapped the zone? Boom, boom, boom. It's wicking the zone. That is a great indicator that price wants to go up. Reason being is because that means the banks came back to this level to test, are the buyers really present here? And the buyers are fighting back, showing them, yes, we're here. So that's why you see price keeps wicking this level, because they're fighting, but the buyers are winning. The buyers keep pushing price back up like, nah, we're here. Push right here, push right here, push again. Okay. Eventually, somebody has to win the battle. And obviously here, the buyers won, because as you can see, that price went up even more. All right. Look at this. Boom. Even more. Now, if you wanted to, you could also look at, okay, even right here, happened again. This is a high. What is the last candle? What's the last sell candle that gave it volume? If you guessed this candle right here, you are correct. This candle, the top of the wick to the bottom of the wick. Boom, right? So this candle caused this volume. Price came back into this zone. And what did it do? It wicked it again. The buyers are present, right? So once you wicked it, who won the battle? The buyers won again. And what did it do? Look at this. Shot up all the way up here. Look at that. All the way. Right? And it's the exact same thing for sells. It's the exact same thing for sales. Because even we could look right here. Okay. We could look right here. You have a break of structure right here. Now we have a break to the downside. Okay. The last buy before it sold off. Like, yes, there's a bullish candle right here, but it had already sold off right here. So the last candle would be this bullish candle from the bottom, pull it up to the top, right? And actually, that's the wrong break. We have this break right here. My apologies. So this was the low. This bullish candle, after this bullish candle, it was volume, selling pressure down. Boom, boom, boom. What candle caused it? This blue one right here. So price came back into the zone. You see these wicks. They came into the zone. Are the sellers really here? Are the sellers present? And what did the sellers do? They showed them that they was present. And boom, sold off even more. Still selling. Boom, boom, boom. Look at this. Look at that. Right? So it's the exact same thing with buys and sales. Yeah. So again, just to go over everything that I spoke on is the anatomy of a candlestick, right? A bearish candle is it closed lower than where it opened at. The wicks are the highs, how high it got, and the lows of the wick is how low it got in the time frame that you are on. The bullish candle is the same thing, but the bullish candle, it closed above where it opened at because the buyers are more present. Okay. And another thing we went over is the reaction to certain zones, supply and demand zones specifically. And how do you identify supply and demand zones? Is where was the last opposing candle before the volume came in and pushed price in a certain direction. Okay. So, and one easy, simple way to figure out what bias you are is the 200 EMA. The 200 EMA will tell you exactly where you are in price and what to look for, buys or sales. So as you can see here, we had this zone, tapped the zone, wicked it, price bullish. We have another zone, price came into it, wicked it, price bullish. Okay. We started breaking down. We have a bullish zone right here. Price came into it, wicked it, sold off. Okay. And this happens all the time. That's why it's very important to identify the higher quality zones compared to the low quality zones. But I'll get into that in another video. Again, like I said, today's video is focused on candlesticks. All right. So, yeah, y'all, that'll be it for today's video. Hopefully you guys learned something. And if you have any questions, just comment them down below. I will get to you as quick as possible. So, with that being said, don't forget to keep everything irie, and I'll catch you on the next one.